Hello, everyone. Today we are going to cover task number 4 for personal tax assessment number 1 and task number 4, the same task for assessment number 2. So if you can see on the screen, this task number 4 is worth about 14 marks for your exam. Mrs. O has the following income for 2023-24. Let me take this one into an Excel sheet and then I will share the screen with you. Yeah, just give me a minute. So I am going to take you into an Excel note, just a minute. Okay, so if you see in Excel sheet here, I have already exported this one into an Excel sheet. So income from employment for Mrs. O is 85,100 pound. So this 85,100 pound, we need to put in under non-savings income. Yeah. But the thing is, why I put here non-saving income is 79,994. The reason is, if we look here at the bottom, there is a note here. During 2021-22, Mrs. O paid 6% of her income from employment into an occupational pension scheme. So remember, there are two types of pension. One is occupational pension scheme and one is a private pension scheme. So anything occupational pension scheme means this pension should have this pension has been deducted from the employment income, and the private pension is like a SIP, self-invested pension, that you invest privately. So if anything is occupational pension scheme, that we need to deduct from our total gross income. So gross income from employment was 85,100. So 6% of our income from employment into occupational pension scheme. So it means 6% of 85,100, that I have calculated it here. So 85,500 and 6% of 85,100 is equal to 5,106 pounds. So it means employment income after pension 85,100 minus 5,106 pound is equal to 79,994 left. So this 79,994 pound I have written here under non-savings income. The next thing is, if we read the question again, the profits from property is 32,600. But here, if you see, there is a note here, Mrs. O has losses from property brought forward from 2020-21 of 14,320. So remember, any losses from property we need to adjust from the profit from the property in the following year. So it means 32,600 minus 14,320 should be equal to 18,280 pounds. So I have written it here. Property income is 18,280. The next one is building society interest received is 3,540 pound. So it is a non-savings income. So sorry, it's a savings income. So I will write under savings income. And then the last thing is dividend received is 10,600. So dividend, I will write it here, 10,600 pound. Okay, now I have completed my table, but now there are additional notes. Her employed paid 10% of her income into the same scheme. So the occupational pension scheme, there are two types. There are two things. One is EE contribution. So EE contribution means employee contribution, and the other one is employer contribution under occupational pension scheme. So EE contribution, we have already find out here, is 5,106 pound, that is 6%. And no, they are saying 10% paid by employer. So 10% of 85,100 is 8510. But this 8510, because employer is paying, it does not affect any tax contribution to for Mrs. O. So we will ignore this figure. The next one is Mrs. O also paid £150 per month into a private pension scheme. So this is a trickier part now. So £150 per month means in a year, 150 multiplied by 12. So the total contribution in a year is 1,800. Yeah. So here 1,800. So next thing is we have to find out the adjusted net income. The reason to find the adjusted net income is we need to find out how much is the personal allowance. So if we look it here, net income is 112,414. So total income, if we add employment income, property income, interest, and dividend, it is equal to 112,414. So that's why I said here net income is 112,414 less private pension. So private pension is, because it is a net £1,800. So we need to convert into a gross. So 1,800 divided by 80 multiplied by 100, it will become 2,250. So the adjusted net income will be 112,414 minus 2,250 will equal to 110,164. Yeah. The next thing is with the help of this adjusted net income, we will find out the personal allowance. So first step is adjusted net income. The second step is we need to find out the personal allowance now. So the personal allowance, we know that if adjusted net income is more than £100,000, so personal allowance reduced by half. So in our case, so what we need to do is 110,164 minus 100,000 will left equal to 10,164, and we need to divide it by 2, and which will be equal to 5,082. So, and the next thing is personal allowance is yearly is 12,570. Yeah. So we need to minus this 5,082 from that one. So the personal allowance left will be 7,488. So this one we will write it here, 7,488. The personal allowance is not available 12,570. It has been reduced due to pension, and due to adjusted net income is greater than 100,000. Sorry, not pension. So the next thing is we need to increase the basic rate band due to pension. So basic rate band is 37,700. So from where you will know this basic rate band is 37,700. So in your exam, they will provide you this table. So I have copied this table from the AAT website. So if you look, 37,700 is up to basic rate, and up to 125,140 is a high rate, and anything above 125,140 is a additional rate. So now if we look now, paid to a pension is 1,800, and when we will gross it up is equal to 2,250 pounds. So new basic rate band is 39,950. So here now we will calculate. If you see, our non-saving income is 90,786, and saving income is 3,540. Dividend income is 10,600. Total income is 104,926. So what is happening now? So 39,950, because basic rate band is now 39,950 due to a contribution into a pension. So it will be 20%, and the tax is 7,990, and the difference between 90,786 minus 39,950 will be equal to 50,836, and the tax at 40% will equal to 20,334 pound 40 pence. So the total will be now 90,786. We have utilized all the non-saving income, and the tax is 28,324 pound 40 pence. So the other thing is savings income. Because Mrs. O is a high rate earner, the saving allowance available is not 1,000. It is available is 500. So the first 500 is at 0%, so no tax. The remaining 3,540 minus 500, left is 3040. So the tax is 1 at 40% is 1216. So we multiply by 40%. The reason is basic rate we have already utilized here. The next thing is dividend. So dividend is regardless of tax band is available £1,000. So 1,000 there is no tax, and the remaining is because it's a basic rate band we have already utilized. So high rate band 9,600. Why is 9,600? Because 10,600 minus 1,000 is equal to 9,600 at 33.75% is equal to 3,240. So the total tax payable is 32,780 pound 40 pence. Because already Mrs. O paid 22,500. Yeah. So it means the total tax payable is 10,280 pound. Yeah. Okay. So this is the end of this example. So let's move forward now, and we look at other example. And the other example is from task number 4, but it is assessment number 2. Yeah, from AAT. I just copied this information from here to save our time. Yeah, I am not going back to the AAT website just to save time. I have already copied this one. So if you see your assessment number 2 for personal tax, so this task number 4 is there. It's about husband and wife, Mr. K and Mrs. K. So in this example, income from employment, first we are going to do Mr. K and then we will do Mrs. K. Mr. K, there is no income from employment, and income from self-employment is there. Yes, we will write it here, 48,780. Yeah. And then the next thing is, I will move this one a little bit here, 1 minute. And the second thing is, profits from property is 12,650. But if you see at the note, Mr. K has losses from his rental property brought forward from 2022-23 of 8,000 pound and 450. So this 12,650 minus 8,450 will give you back 4,200. The saving income is 920. Yeah, it will be here. And dividend is 2630. Yeah, 2630. So the total income is 56,530. Okay, there is one more note here. Mr. K paid during a year £100 per month into a pension scheme. We know that if there is a contribution into a pension scheme, it has two effects. So one effect is we need to gross it up. Yeah. And the second one is we need to increase the basic rate band. Yeah. And we from adjusted, we need to do our adjusted net income. So if it is more than 100,000 pound. So in our case, what we need to do now is, if we look, our adjusted net income, because it is not more than 100,000, we don't need to be worried about. The thing we need to do is we need to gross it up, this pension. So private pension contribution is 1,200 pound. Yeah. So if you look here, we need to increase the basic rate band. So basic rate band is 37,700. Paid to pension is 100 pound multiplied by 12 is 1,200 pound. And the new basic rate band will be 39,200. So we will add 37,700 plus 1,500. So 1,500 is actually, we gross it up. Yeah. Okay, let's start now the tax computation. So basic rate band is now 39,200 at 20%. The tax is 7,840. High rate band is 40%, 1,210 at 484 tax we got. And savings income is 500 pound. We don't need to pay any tax. And the remaining 420 pound is 168. And similarly, the dividend, first 1,000 pound, we don't need to pay anything. And the remaining 1,630 should be at 33.75%. So the total tax payable is 9,442 pound and 13 pence. We need to add non-savings tax, savings tax, and dividend tax. So total will be 9,042 pound and 13 pence. Okay, let's do the same example for Mrs. K now. So before we did Mr. K and now is Mrs. K now. So Mrs. K is now, if we look, income from employment is 26,780 pound. Income from self-employment is nothing. Property from income from property is 12,650, and building society interest is 1,090, and individual saving account interest received, it is exempt. ISA, remember, there is ISA we should not have to include in our calculation. Dividend received is 3,870. And now we need to read the notes, no, what the notes are saying. So if we see the notes here, Mrs. K paid 2,800 in PAYE. There is no other thing they said about Mrs. K. So it's very simple example. So whatever the tax we will compute, we will take it out this 2,800 from there. It is very simple example. So her total net income is 44,390, and the full personal allowance she has. So non-saving income is 39,430 minus 12,570. So total tax payable is 26,860, and savings income is 1,090. Dividend income is 3,870, and total income is 31,820. So now the thing here is basic rate band 26860 at 20%. So tax is 5,372. Still she has the basic rate band left. So saving allowance we know is 1,000. There is no tax, and the remaining 90 pound is 20%. And the dividend norm, we know that 1,000 pound there is no tax, and the remaining 2,870 is 8.75. Why? The reason is, if we look here, all this together 31,820, it is less than 37,700 pounds. So it means she is a basic rate taxpayer. We don't need to do with this 33.75 or 40%. Yeah. So at the end, if we look, the total tax payable is 5,641.13. And here, if you see the notes, she already paid 2,800 in PAYE. So if we minus this 2,800 from 5,641.13, total tax payable will be 2,841.13. Yeah. So this is the end of our lecture today. So in today's lecture, we covered task number 4 from personal tax assessment number 1 and assessment number 2. If you like this one, please subscribe our channel, like it, and share with your friends and families. Thank you very much.